All right, everyone, welcome back for another episode of This Week in Charts via Carnival Trades and Wall Street from Main Street. If you're not done so already, give the video a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon, or come find me on carnivoretrades.com for swing trading alerts and analysis. Well, anyways, let's get into it here. So it was a week of absolutely epic volatility. Nothing really short of that, no other way to describe it. And it was definitely one for the record books, specifically the reaction on Thursday to the CPI. So I'm sure everyone's aware by now, but we erased really 3.5 days worth of selling, and including a gap down on Thursday, really in just a few hours. And we had a power reversal by the close. And then by Friday, most of those gains had really been reversed. So we just had this continued 20 moving average rejection here on the daily time frame, and also kind of coinciding with this downsloping trend line here going back to the August high. So that has been resistance here for the market. And even with that power reversal on Thursday, and a lot of people were thinking like, oh, maybe this is it. This is the bottom here. But, Friday it came right back in and we had a nice little sell-off. And, I said immediately on Thursday afternoon, by the close before the reversal Friday, that we never really had, this shouldn't be a bottom. We never had any sort of capitulation. If you take a look at Thursday's price action on the VIX, this was, after a tiny little uptick in the morning, this was red all day long. So we never even broke the 35 handle, let alone, 38 or 40 or anything like that. And, we did have good volume Thursday, on the sell-off, but it wasn't even as much volume as we got on the 24th of January or the 24th of February. Not even much more than the June lows here either. So we really need to see that surge, that humongous surge of volume, 200, 300 million shares at least, to get capitulation. You need a VIX breakout for that to happen, and then a major reversal. And the VIX was only down Thursday. It was only down like 4.5%. And it closed, flattish on Friday. So a lot of those puts got really rolled over into future months. And what Thursday looked like to me was kind of a market maker cleanup operation. Actually, Goldman just released a report. I believe it was 43% of options traded right now are 0 day till expiration, meaning that they expire that same day. And this options market is getting out of control. And you can see a lot of this coming from excessive gambling, a lot of excessive positioning. And you get those big moves when we have this option market that's very distorted. I think personally, when this is all said and done, at some point in the future, there will be probably heavy regulation done to the options market. Because we've seen the gamma squeeze be a thing really since 2020, and we've had some major distortions in this market. Remember Avis budget last year? I mean, that major move there. Of course, everybody knows GameStop and AMC, of course, as well. But I think and Tesla is another kind of poster child for the gamma squeeze here. But I think personally we'll probably see some type of regulation at some point in the future on this. But the options market is absolutely insane right now, and we're seeing insane volatility to both sides. I mean, look at what happened on Friday. We had this huge move off the lows, and we closed down almost 2.5% on the spiders Friday. So just crazy volatility in both directions. Big picture, though, most importantly, again, to add to my point that this isn't a bottom yet, you just got to look at the 2-year Treasury. This thing's still getting pounded, and finished down 6 basis points on Friday. And this is the CPI reaction Thursday. This is where we put in the low, and we're not that far off of that currently. And we never even got that far off of that on Thursday. Still finished red. The 2-year was red with that big surge in the market. You look at municipal bonds, just continuing this downtrend near 52-week lows, getting hit again on Friday and Thursday as well. HYG, JNK, LQD, all these, the high yield debt names are still at or near the lows of the year. And this is indicative of that we, do not have a bottom just yet. And the NASDAQ has got to catch up with that 2-year Treasury, and it has not done so yet. So again, until bonds, basically really the simplest way to put it is, unless bonds bottom, this market's not going to bottom. And that's going to be your best indicator here moving forward. So I do believe there will be downside. Now, this doesn't mean we go down in a straight line forever. There will be big bounces, and as we can see with how wildly positioned everyone is in this market, you're going to have big bounces and big sell-offs. So be prepared for epic volatility. moving forward here. As far as levels here, looking at the triple Qs, so I have this white trend line right here, this lower one, and that is kind of like my master level here right now for the Qs. If you break below that, really on, I would say probably like an hourly close, if you get an hourly close below that, or if you get a gap down below that, that is kind of, especially a daily chart close. You get it below that level. That's really the line in the sand that I think you could really start to see some accelerated selling. For the spiders here, that's really kind of about 355, 356. But that triple Qs level, I'm really going off of that one more so because there's a very clear defined pivot that goes back to September 2020. And I think a break of that level really takes you back down to that 230 area, pre-pandemic highs, 230, 240, which is ultimately where I'm looking for the market to go. On spiders, I'm looking for at least 340, and then on the low end, 320 there. So again, doesn't mean we go down in a straight line. Nothing does that forever, but those are kind of the price targets that I am looking for here moving forward. Another interesting equity to watch, we just mentioned Tesla, but this, and I'm mentioning this because this is a big S&P and NASDAQ component, but this triggered a monster head and shoulders pattern this week with the weekly close below that neckline. And above that, you had 1, 2, 3 failed inside bar patterns. I mean, these were good, power bar patterns that we closed below, all of them, on Friday with the weekly close and triggering a head and shoulder. So this is in major trouble here. And I bring this up because if Tesla, let's say, breaks, so we broke this level, your next area, you have a little bit of support down here at 175, but your next breakout area is 150. So if Tesla goes down to 150, that's going to put an enormous amount of pressure on the NASDAQ and the S&P. So definitely a level I'm watching moving forward next week. So definitely keep that one on your radar as well. As far as the rest of the sectors we usually cover, semiconductors, again, you kind of got into, again, looks like everything else Friday and then a reversal again on Thursday and then Friday. We went into this little chop zone here, the yellow kind of zone. So we may get a little bit of a bounce here. Semis are pretty oversold, but ultimately I think you're headed back to that 150 handle. Again, pre-pandemic highs, never was really back tested. So that's kind of your logical downside target there for the semiconductors. IGV, also new 52-week lows this week. This is already below pre-pandemic highs. So I think ultimately this wants somewhere in that 220 to 215 range when it's all said and done. But again, showing a little bit of weakness here as well, just like everything else tech related. Dow Transport's actually holding up a little bit better, not making new lows. But again, we mentioned this over the last month or so that this was kind of a leading indicator, which the transports often are. And this started really selling off before everything else did. You see 923 there, the low. And then we just look at, for instance, the S&P where it was on 923. It hadn't made new lows yet. So the transport's already kind of made new lows. And they are bouncing off of that. Ultimately, still, you got rejected here. You tried to break out of this trend line Thursday, and that got rejected on Friday. And then if you take a look at the weekly, again, you still have a bearish inside bar. So red bar, big power bar there, 1, 2, 3 inside, small candles. So that is setting up a bear pattern here, and the trend is down on the weekly and daily time frame. So be careful with the transports. They're talking to us right now, as is really everything. If you want to take a look at the Russell 2000 as well, same kind of inside bar pattern there on the weekly, and the diamond Dow Jones, again, same thing right there. So we got these weekly inside bars setting up here on the market. Spiders, same thing, 1, 2, 3 sideways action again. So this market is still set up to go lower, and ultimately bonds, again, the big thing to me is bonds are not signaling that we are in a bottom or close to a bottom just yet. Speaking of bonds, so interest rates here, again, 10-year continued higher here on both Thursday and Friday. That was a red flag that the market was not done selling. So up 1.5% on Friday, 30-year up 1.17. So still in a strong uptrend here. And by the way, 2s and 10s finished the week at negative 47.6 of basis point spread. So that was, so again, that actually hit a new low on Thursday. The 2-year, the 2-10 spread actually hit a new low on Thursday. I was actually down, I want to say 52 basis points at one point. So again, that was another tell there, right? If the market had supposedly bottomed on Thursday, then why did the yield curve invert further? So again, bonds not signaling anything yet, and we have to keep an eye on those moving forward. Anyways, XLF. Let's get into financial. So we had some bank earnings Friday. I believe JP Morgan, Wells Fargo. Wells Fargo had a nice reaction that did gap up and, got a nice bounce off that trend line there. JP Morgan also behaved well, although it did come off the highs here. I believe PNC reported as well. That was kind of an inside day for PNC. Morgan Stanley, not a good reaction there as that closed near the lows of Thursday, and that put pressure on the broker dealers. So pretty good reversal on the broker dealers there, XBD. And again, getting rejected at that 200-day and 50-day moving average again. So that might be kind of the resistance level here moving forward on XBD. And that did take a hit here, down almost 4% on Friday. And XLF went right up to that 32 handle. Again, I've had that trend line in there for several months now, and that has been a good level here. Again, remember, we couldn't get above it. Then we broke out, basically tested it, broke back below, tested again. And so that has been resistance here on the XLF moving forward. If you get above that, then I'll give the XLF upside bias to probably 34. But for right now, that did get rejected here. And any break of, I would say, 32 is going to kind of coincide with that 260 level there on the triple Qs. And that's kind of the line in the sand right now on the XLF. And then, of course, the pivot low there as well will be your next level. All right, let's flip over here. Let's go to crude here and shift gears. So crude, I told you guys last week that I liked the move off the lows there in crude, but I said it was a little bit overbought, and we did get a pullback. So nice little 1, 2, 3, 4, 5. 4 out of the last 5 days it was down. So crude did pull in a little bit. Again, no confirmation above this downsloping trend line. And basically where we stalled out on Friday is this upsloping trend line, that yellow trend line that has been pretty good over the last 2 years or so. Of a pivot point here for the market. Now, if we break below this, I think there's still a chance you could get back down to that 75 handle, and that would probably coincide with some type of major sell-off in the market. You guys know I've been saying that for a while. I do like energy. I do like crude. But if we get a panic sell in the market where the S&P dumps down to 320 on the SPY, you could get margin selling, which causes crude to come down, right? So that would make sense there. And, that could take you down to that level. So that's what we'll be watching here in the future. If this ends up holding and putting in a higher low, then you'll have resistance up at that 95 handle and that 200-day moving average here in the short term. But for right now, crude pulling back, but it's still holding up nicely. XLE, same thing. We talked about this trend line last week. We tried to get back above it again on Thursday and then ultimately couldn't confirm it on Friday, but XLE is still holding up really well. So give it the benefit of the doubt. Same thing with XOP, it's basically the same chart. You got that same trend line in there as well. And then the OIH, also a little bit weaker, but I do kind of like this pattern here. It's starting to build up a little bit of a base, and if it can go sideways a little bit longer, this can actually push higher. The only reason I haven't really gotten into any of these lately is because of what I was just saying. If the market does dump out, everything's going to go down. And that's when I'd rather buy these rather than kind of, chase them up here now and then hope that they don't sell off with everything else. I'd rather wait for kind of like a panic sell that it's not sector specific related. But anyways, OIH holding up pretty decently. Nat gas, no real change here this week. Still kind of setting up bearish consolidation here on the daily. I will be a buyer of this lower 550, maybe somewhere sub 530, somewhere in that area. That's ultimately where I think it wants to go. But nat gas still been kind of in basically kind of just range bound here for the last couple of weeks. So no real changes there on that. Let's look at CCJ. So obviously CCJ took a pretty big hit in the middle of the week. So they did some share dilution. Now we did get a weekly close below this trend line. So that is the first time really since the beginning of 2021 that we broke that trend line, and you went right into that 100-day moving average. Now the trend is still very strong. It's very strong to the upside. So if you get a weekly close back above this, that would negate that breakdown. Now I know, Jason likes the company long term. The share dilution is going to set them up in the future, but short term, the market never likes it when you do share dilution, and that's just kind of what we saw here this week. So that did break that trend line, and we'll have to watch that moving forward. If we can get back above this on a weekly close, though, that would negate the breakdown. So I just wanted to cover that one really quick, and then just to cover ag really fast as well, DBC. So we talked about the negation of that little kind of bear flag breakdown. And again, we pulled back off the 20 MA by the end of the week and still closed above the 50. So no real problems here. Just kind of backed off of that level. But again, trend is still very, very strong and to the upside. So DBC hanging in there, and no real problems that I can see right now. Shifting over to the dollar. Again, also holding up very well. Again, above all four major moving averages. Even that little dump on Thursday where the market really rip-roared to the upside, it didn't even challenge. I mean, it challenged the 20 moving average. And then on Friday, you got another lift off of that. So the dollar is still holding up really well and needs to be respected at least for possibly this upper trend line. I mean, you have higher lows all the way up, so there's nothing to say this can't move higher. And the higher it goes, eventually more things will start to break. And that could be your catalyst for, you know, what we were talking about with a panic move. So anyways, dollar holding up well. Gold also taking a little bit of a hit with the dollar strength. Again, I still think there's one more good sell in metals, and then I think it'll be time to get in here, specifically with gold. I think silver is holding up much better, and platinum is really my rock star here. This is still held up really well. It has higher lows here on the daily time frame and weekly, and this one's really still far away from the lows, where if you look at gold or even silver, this is, you know, these are both much closer to 52-week lows, whereas platinum has held up a lot better. So I like platinum the best out of the metals, at least in the near to medium term. And then copper here, also kind of just stuck in this channel. It's trying to make, you know, higher lows. Again, we'll watch these two trend lines, but I'm really just kind of stuck in a range this week. If you break above that, then I would give it the upside bias to about 370. But copper really just kind of stuck in a range right now. And, you know, we'll just kind of leave it at that. All right, and then lastly, Bitcoin here. So again, continues to be stuck in this range. It did test that trend line on Thursday, got a nice little bit off it, and now it's just kind of stuck sideways. A lot of people have been saying, like, you know, Bitcoin is showing lots of relative strength here compared to the market, and that's a bullish sign. I'm not necessarily in that camp. I think it's more so the fact that you've sold off from all-time highs. In fact, this is more comparable. Let's pull up ARK here. Like this chart, the chart of Bitcoin is more comparable to ARK, if you ask me, than it is to like recent price action. So, I mean, we topped out in ARK in really like what, February 2021. Then we came up, had this lower high here, and that kind of coincided with that that level on Bitcoin. At least, you know, Bitcoin did make higher highs, obviously, but to me, it's more of these risk-on plays, these ultra risk-on plays, like the ARK names of the world, Unity Software, you know, Zoom, Roku, those types of names, and Bitcoin, you know, the cryptos, they topped out much sooner, and they've sold off so much here that there's not as many sellers as there is or has to be for other NASDAQ stocks or S&P stocks, right? So the biggest risk names are going to be the first to go. And then the least, you know, the safest names, the Apples, the Teslas of the world are going to be the last ones to sell off. So I don't really look at it as there's relative strength. I just look at it as there's already been so much selling that there's not as much downside here in the near term. Now, it doesn't mean it can't go lower. Again, if we have a panic event, I do think Bitcoin probably goes down to 12, 13,000. And again, the charts do suggest that. If you take a look at the weekly, this is still a weekly inside bar. And that's a big bear base there, and on the monthly as well. So big bear base there on the monthly. So again, doesn't mean it can't go lower. It just means right now, I think there's a lack of real sellers in the market on these crypto names. So just want to make that distinction here moving forward. And, you know, really outside of that, it's tough to find too many safer spaces right now in the market. That's the problem with this. You know, typically the risk off scenario is you just buy bonds. You buy TLT, and TLT hasn't held up. You know, you buy municipal bonds. It doesn't work. Right now, there's not a lot of safe places in the market outside of a few, you know, there's a few biotech names, a few healthcare names. You know, you've got like Amgen has held up really well. This has been a strong name. You know, you can take a look on the weekly there. That's holding up really well. McKesson's one that's still making all-time highs. So some of these healthcare biotech names are really, you know, holding up well. You have XLE again. You know, we talked about that. That has been in a strong uptrend, and I still like it. The only reason I don't want to jump in it is if we get that kind of major sell, that panic event, you know, what if I could get this down at $60 rather than, you know, 80? You know, there's always that chance. So it's really hard. There's not a lot of safe spaces in this market, and especially with, you know, we talked about earlier, those zero DTE options, the intraday gambling that's going on. It's causing major distortions, and I think we're going to continue to see a lot of volatility here moving forward. Anyways, guys, yeah, just to reiterate, so levels I'm watching next week, 355, 356 on the spiders, but really the most clear distinct one is 260 on the triple Qs. A break of that could cause some major selling here, if you ask me. Anyways, guys, going to wrap it up here. Come find Jason on Patreon. Come find me on carnivoretrades.com, and I'll talk to you guys all next week.